Hey everyone, and welcome back to Investing Talk Podcast. Today, we're going to be looking at Allstate Corporation, ticker symbol ALL,
Okay.
a major player in the insurance world. And, it's been a pretty wild ride for the market lately.
It has.
But Allstate's actually sitting in a decent position with some strong earnings. The catch is that they've also been hit hard by some major catastrophe losses.
Right.
So the question is, can they really deliver for investors with everything that's going on?
Well, that's the question, isn't it? And to really unpack Allstate's potential, we first need to zoom out and really understand the current market landscape. And it's definitely not a market for the faint of heart right now.
Oh, no kidding. Just look at what happened on February 21st, 2025. The Dow Jones dropped over 700 points.
Yeah.
It seems like everyone's spooked about inflation and, those tariffs that are looming.
Absolutely. And it's not just the Dow. We're seeing the U.S. services PMI contracting, and even Walmart singing the blues about the future. All of this is pointing to a pretty jittery market, and investors are understandably looking for some stability, some safe haven.
Okay, so we've got this backdrop of uncertainty. How does Allstate fit into this? Because insurance stocks usually march to the beat of their own drum, right?
That's right. They tend to be less sensitive to the ups and downs that you see in other sectors like tech or consumer goods. What's really interesting about Allstate is that it's trading at a surprisingly low price-to-earnings multiple compared to the broader market. Around 11 times 2025 expected EPS and just 9 times for 2026.
So they're kind of flying under the radar. Could this be a hidden gem for value investors?
It's certainly a possibility, and you can't ignore the fact that Allstate's CEO is shooting for a pretty ambitious target, a 20% or higher return on equity. For new business, they're banking on rising interest income and a healthy float, which is that money that they collect from premiums before they pay out any claims.
Okay, ambitious CEO, potentially undervalued stock.
Right.
Sounds pretty promising.
Right.
But hold on, didn't they also announce some pretty hefty losses from those California wildfires?
You're right. It's not all sunshine and roses. While Allstate did beat Q4 2024 earnings expectations, reporting $7.67 EPS versus an expected $6.51, they also revealed a whopping $1.1 billion estimated loss from those late 2024 wildfires. And to add insult to injury, another $1.8 billion in catastrophe losses just for January 2025.
Ouch, that's got to sting. Those losses have to put a dent in their plans, right? I mean, can they really hit that 20% return on equity target with all these setbacks?
That's the question that a lot of investors are asking. And it makes their recent decision to sell off their employer stop-loss segment to Nationwide for $1.25 billion. Even more intriguing. Some see it as a strategic streamlining, but others worry it might limit future growth.
Okay, so we've got this mix of positive and negative news swirling around Allstate. On one hand, they're posting good earnings and their CEO's got big plans. On the other hand, these catastrophe losses are a real blow. It's kind of a nail-biter. What are the analysts saying about all this?
Well, despite all the challenges, some major players are still pretty bullish on Allstate. Goldman Sachs, for example, has given them a buy rating with a price target of $232.
Wow.
And Evercore ISI recently upgraded their rating to outperform.
Wow. So even with those wildfire losses, they're getting some serious thumbs up. I'm guessing it all comes back to that low price-to-earnings ratio.
Exactly. Analysts are drawn to that, and they're also banking on Allstate's ability to hit that ambitious return on equity target. It's almost like they're saying, yeah, there are some bumps in the road, but the long-term potential is still there.
All right. So we've got the market jitters, Allstate's unique position in all this, strong earnings mixed with some hefty losses, and some surprisingly optimistic analysts. Where do we go from here? What are the biggest risks and rewards for everyday investors like you and me?
That's where things get really interesting. Let's start with the risks.
All right, so let's talk about those risks. We can't ignore those massive catastrophe losses, right?
Yeah.
I mean, we're talking billions of dollars here.
Yeah.
Does this suggest that Allstate is more vulnerable than we initially thought?
Well, it's definitely a concern.
Okay.
The recent wildfires and those January storms, they really highlight the very real impact of climate change on the insurance industry.
Right.
And these events are becoming more frequent and more severe, which means the potential for future losses is only going to increase.
Okay, so this is something that's unique to Allstate.
Yeah.
Or are other insurers facing the same problem?
It's an industry-wide issue. In fact, one of the key factors driving up risk for insurers is the rising cost of reinsurance. Think of it as insurance for insurance companies. They buy it to protect themselves from catastrophic losses. But those reinsurance premiums are skyrocketing. Allstate even mentioned this as a major concern in their recent 10K filing.
Okay, so that's one big risk, rising reinsurance costs
Yeah.
due to climate change. What else should investors be wary of?
We also have to consider the impact of evolving privacy regulations and the increasing role of artificial intelligence in the insurance industry. This is new territory, and it's really unclear how these developments will play out.
Right.
They could create new challenges for Allstate, or they could open up new opportunities. It's a bit of a wild card at this point.
All right, so we've got climate change driving up reinsurance costs and the uncertainty surrounding new technology and regulations. Those are some pretty hefty risks.
Yeah.
But let's flip the coin.
Okay.
What are the potential rewards for investors who are willing to take on that risk?
Well, we've already talked about that tantalizingly low price-to-earnings ratio compared to the broader market and even to some of its peers.
Right.
Like Progressive, ticker symbol PGR, and Berkshire Hathaway, ticker symbol BRK. Allstate looks potentially undervalued.
Right, so there's that value play aspect.
Yeah.
But is there anything else that makes Allstate stand out from the crowd? What makes them a compelling investment aside from just being cheap?
One word: stability. Allstate has a long track record of weathering storms, both literally and figuratively.
Right.
They've been around for almost a century, and they've seen it all: recessions, wars, natural disasters, and through it all, they've consistently delivered for investors.
That's a good point. They're not some flashy, high-growth tech company promising the moon.
Right.
They're a solid, steady company with a history of paying dividends and providing consistent returns.
Exactly. And in this market where everything feels so volatile and uncertain, that kind of stability becomes incredibly valuable. We might even see a flight to safety, where investors shift their money out of those high-risk, high-growth companies and into more stable, value-oriented companies like Allstate.
Okay, so Allstate's stable, potentially undervalued, and possibly poised to benefit from a shift in investor sentiment.
Right.
But they've also got those significant risks that we talked about.
Yeah.
It sounds like it all boils down to this. Can Allstate deliver on its promises? Can they overcome those losses and achieve that ambitious 20% return on equity target?
That's the crux of it. And to answer that question, we need to look at the bigger picture. How is Allstate approaching these challenges? What are they doing differently from their competitors? And what does their track record tell us about their ability to adapt and succeed in a changing world?
Those are some great questions. And I think to really understand Allstate's potential, we need to dig a little deeper into their strategies and their leadership. Let's start with the CEO. He's the one who set that ambitious 20% return on equity target, and he's also been making some bold moves, like selling off that stop-loss segment. What's his vision for the company? And how confident are we that he can execute it?
Well, to understand his vision, we need to go back to Allstate's roots.
So we've got this picture of Allstate, a company with a rich history, a leader focused on innovation, and a strategy built around both stability and growth. But the question still remains, can they actually pull it off? Can they overcome those wildfire losses, navigate the rising costs of reinsurance, and still hit that ambitious 20% return on equity target?
It's a tall order, no doubt. But here's the thing. Allstate has a history of exceeding expectations. Remember, they just beat their Q4 earnings estimates despite those significant losses. And they're not just sitting back and hoping for the best. They're actively adapting to the changing landscape of the insurance industry.
Right? Like their push into telematics with Drive Safe and their focus on data analytics to personalize policies. It sounds like they're really trying to get ahead of the curve. But are these initiatives enough to really move the needle?
That's what we'll have to watch for. Their next earnings report will be crucial. It'll give us a better sense of how these initiatives are impacting their bottom line and whether they're on track to hit that 20% ROE target.
So it's a wait-and-see situation.
Yeah.
But honestly, that's what makes investing so fascinating, right? It's all about analyzing the information, weighing the risks and rewards, and making a judgment call. There's no crystal ball.
Exactly. And that's why we encourage everyone to do their own research and come to their own conclusions. We've laid out the facts, explored the different angles, and highlighted the key questions to consider. Now it's up to each individual investor to decide whether Allstate is the right fit for their portfolio.
Well said. So for all of you listening out there, we want to hear from you. What's your take on Allstate? Are you bullish on their future, or do you think the risks outweigh the rewards? Head over to the comments section and let us know your thoughts.
And while you're at it, don't forget to subscribe to Investing Talk Podcast for more in-depth discussions on the stock market and everything investing. We're here to help you navigate the complexities and make informed decisions.
And hey, if you found this episode valuable, why not share it with a friend or family member who might also be interested in Allstate, or just learning more about investing in general? Let's spread the knowledge and empower everyone to make smart financial choices.
Thanks for joining us today. And remember, the best investment you can make is in yourself. Keep learning, keep exploring, and keep those investing questions coming.
Until next time, happy investing.